You know, I find it interesting because I watch on Twitter and everybody's down on MicroStrategy and down on Bitcoin. How come it's not moving yet? And I'm just kind of like, guys, we've seen this pattern. This is old stuff. You know, just give it 30 to 60 to 90 days. And people always ask me, what are your predictions? I think by the end of calendar, 2025, gold will probably be at 4,000 and Bitcoin will probably be at 140, maybe 150. So, and we'll be kind of on to the next run. And I say that just because I don't think they can keep this thing going without, more programs that obviously indicate printing. And the programs are subtle. This shadow QE through twist of buying bonds, and I'm pretty sure they're into the banks and telling the banks to buy the bonds and maybe giving them swap lines at low rates that they're not telling us about. I mean, they're doing all kinds of things. They're pretty good at camouflaging what's really going on.
Lawrence Lepard has been watching the rhythm between gold and Bitcoin long enough to spot a familiar pattern. He points back to early 2019 when Jerome Powell pivoted on monetary policy. The Fed had to ease, gold picked it up immediately and its price jumped. Bitcoin, on the other hand, looked dead in the water for a while. But then it caught on to what was happening: money printing, currency debasement, a weakening Fed stance, and it absolutely ripped. From $10,000 it surged to $50,000, far outpacing gold's steady climb. Lepard says this isn't a one-off story. The sequence repeats: gold senses easing or inflation first, moves higher, and Bitcoin seems to lag behind. Then, almost without warning, Bitcoin wakes up, rockets higher, and overshoots gold by a wide margin. That's the dance the two assets have been doing for years. Gold is the early signal, Bitcoin is the explosive follow-through. Right now, he says, the frustration is clear. People are looking at Bitcoin and asking why it's so sluggish while gold has been strong. To him, this is exactly what history shows. Gold leads, Bitcoin eventually catches fire. Looking ahead, Lepard sees gold pushing toward $4,000 by the end of 2025. While Bitcoin could be trading in the $140,000, $150,000 range. The lag might test patience, but the setup is familiar. Gold lights the fuse and Bitcoin blows it open. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
So what we're looking at here, Walker, is a chart that shows from early 2018 to the present, maybe a week old, the price of Bitcoin in orange, appropriately.
Naturally.
And the price of gold in gold. And the scales are different because in this time frame, gold went up 200% and Bitcoin went up 2,000%. So you can't really compare the amount of the move. Bitcoin, as we know, is superior to gold in price performance and has been for a long time, and I think will continue to be. And for aggressive investors, it is clearly the best choice. The only trade-off is it's a little more volatile than gold. Not a little more; it's a lot more volatile than gold. But here's what I find interesting about this chart is that there are several instances in history where gold has smelled the oncoming inflation and moved first. And probably the most notable one is early 2019 when Powell pivoted and that kind of, it just became clear that financial conditions were getting tight and they were going to have to loosen. And gold smelled it. Gold on the right-hand scale was, about 1,000. It scored it up to 1365, or higher, before it went up to 2,000 roughly in COVID. But notice that nice move in gold and Bitcoin. Meanwhile, Bitcoin's just kind of going sideways, not really going anywhere. And then at some point, the Bitcoin, market woke up and was like, hang on a second. There's been a lot of debasement here. We had COVID, we printed all this money, blah, blah, blah. And it took off like a rocket sled. And, notably, as I say, gold went up 30, 40%. Well, Bitcoin, as you and I both recall, because we were there, Bitcoin's went from 10,000 to 50,000, like quickly,
Yeah.
So it vastly outperformed gold. And then, of course, the gold smelled the tightening, started to come down. Bitcoin followed and came down even more, and that was Sam Bankman-Fried. And then, of course, another run, okay, maybe we do have more inflation, but no, we don't, came back in. Then they both went down when Powell started tightening in 2022, and Bitcoin went down more than gold. Again, it's more volatile. But then gold, and in this particular case, gold again started to smell it. The Bitcoin's going down right here, and gold is going up. What's that all about, right? But eventually Bitcoin got the memo, started to go up, and then gold came down. Bitcoin didn't come down as much. And then, of course, Then gold really started to go up in 2023, took out 2,000, in 2024, 2,500. And of course, Bitcoin, came off of the bottom and just has rocketed up to 100, right? And actually even higher. And in each case, though, again, gold moving higher here, Bitcoin still going down, but then comes back. Gold moving higher, Bitcoin coming down, but then comes back. And so here we are, and this isn't fully up to date because gold's now over the 3,500 number. It's into the 36 area, right? So it'd be off the chart, not by a lot, but Bitcoin's still languishing around at, what is it, 109 today or something? So
a boring 109,000 US dollars, just a boring number. Yeah.
You're feeling fine about it, but if you bought it right at the peak at 123, maybe you'll think,
Sure.
Heck, this sucks. But, I find it interesting because I watch on Twitter and everybody's down on MicroStrategy and down on Bitcoin. How come it's not moving yet? And I'm just kind of like, guys, we've seen this pattern. This is old stuff. Just give it 30 to 60 to 90 days. And people always ask me, what are your predictions? I think by the end of calendar, 2025, gold will probably be at 4,000 and Bitcoin will probably be at 140, maybe 150. So, and we'll be kind of on to the next run. And I say that just because I don't think they can keep this thing going without, more programs that obviously indicate printing. And
Lawrence Lepard doesn't mince words when it comes to the roots of today's monetary mess. The old model, trying to grow the economy on the back of endless debt, was flawed from the beginning. Instead of markets setting the cost of money, a handful of central bankers get in a room and dictate interest rates for the entire system. That's not free markets at work. In a real market, rates would reflect the balance between savings and demand for capital. But governments wanted cheap financing for wars and social programs, and banks wanted profits. Ordinary people got stuck with the bill through inflation. This isn't new, Lepard says. It's been the story since the Fed's creation in 1913. Almost immediately, the central bank financed World War I. Prices doubled, not from higher taxes but from inflation. The cycle has repeated again and again. The real break came in 1971 when the U.S. walked away from the gold standard. Gold wasn't perfect, but it was sound money for its era. It imposed discipline on governments that fiat simply doesn't. Once that link was severed, the slide into unchecked money printing accelerated. Lepard argues this collapse of monetary discipline is exactly what Satoshi Nakamoto saw. This is why Bitcoin exists. The warning was carved into its genesis block. Governments will always abuse the privilege of printing money, so the world needs a system they can't corrupt. Let's get back to the interview.
By the way, it's that technology that's going to save us because the microprocessor led to the distribution of information, led to the internet, led to the breaking down of the sclerotic big organizations, and has now led to Bitcoin, really, because, without technology and the microprocessor and, distributed networks and everything else, Bitcoin sound money in a digital form would not exist. And so, thankfully, technology is going to save us, but, and it's a beacon of where we need to be going, as a society. And just the notion that we have to have this, asset-based debt to grow it's so flawed. And it's, how did it get that way, right? How did we ever get to a place where we had 12 people setting the cost of money? It's barbaric, right? It should be the free market. It should be the balance of interest, balance of savings against the need for capital, set the interest rate, right? Free market pricing. But we got there because we had two parties in the country that were very, very interested in not having that system. One of them was the financiers and the banks and wealthy people, and the other was the government. And so what happened is they kind of figured out a way to make a deal between themselves where they would both benefit and the average person would suffer inflation. And it started with the Fed in 1913. They immediately broke their charter and helped finance World War I. So the government got its war paid for, and the Fed and the banks made a ton of money on war profiteering. And the effect of World War I was the price of everything doubled, right? So we paid for World War I. We just didn't pay for it through taxation. They paid for it by, the price level went up 100%. So, and that, wash, rinse, repeat. That story since 1916 to present, with a lot of interim bumps and developments, probably the biggest of which I heavily talk about in the book, was abandoning gold in 1971. I mean, pre-Bitcoin, gold was sound money. It was your only choice. It was your soundest choice. And obviously, Bitcoin is sound money too. It's digital sound money. It's in so many ways superior to gold, but I always remind Bitcoin people, you got to remember what got us here, and you got to remember how good things were on the gold standard. They weren't perfect, but they were better than they were on a fiat standard. And and when we got off the gold standard, that started the slide. And of course, it's that slide that then led Satoshi to develop Bitcoin, because as we know in Block 1, he said, chancellor on the brink. And And he in a lot of his writings, he talked about how the abuse of the money printing privilege was a big reason for the invention of Bitcoin, because central banks will always and have always abused that privilege. And the thing I think is so unique and interesting about Bitcoin, I think it makes it very hard for most people to understand, is this is the first form of money. And this is why Jesse Meyer, who I love, says this is once in a millennium kind of, or once in a species kind of event, is every form of money used by mankind. And we've used tons of things. We use beads and salt and, grain and livestock. There are lots of forms of money, yap stones, whatever. But every one of them had some, you could create more of it. There was an additional supply somehow available. And we all know that any commodity like gold or oil or anything else, if the price goes high enough, we'll find more of it because somebody will be rewarded to do so. Here you are with Bitcoin. Okay, so turn that on its head. And this is why it's going up forever, Laura. Turn that on its head. Turn that on its head. We actually have a form of money with a fixed supply. And it's like, boom. I mean, just mind blown. That just did not exist. So forget all your, this is why sales is your models are broken. Forget all your models. Forget the past. Try to think outside the box and ask yourself, if something really like that changed and it's that significant, what are all the implications? I mean, it would be similar to, the Wright brothers fly. I mean, did anyone see that we'd go to the moon, or that we'd have a Concorde that could go across the ocean in 3 hours, or all the kinds of stuff that would happen?
What Lepard's perspective really underscores is the cycle of restraint and excess that has defined modern monetary history. Each time governments lean on debt and inflation to cover their obligations, confidence in fiat weakens and the search for alternatives intensifies. Gold has traditionally carried that weight, steady and trusted, while Bitcoin represents the more aggressive, high-velocity response to the same pressures. Together they expose the cracks in a system that relies on central planners rather than true market balance. The more that pattern repeats, the stronger the case becomes for money that cannot be manipulated at will. If both gold and Bitcoin are destined to thrive on the failure of fiat discipline, the real question is whether one ultimately eclipses the other, or if they will coexist as twin anchors in a world learning to live without trust in paper money. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.